What is happening, crypto fam? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse-pounding developments shaping our digital future. The news cycle is moving at warp speed, and if you're not plugged in, you're missing out. Today, we've got a lineup that's going to blow your minds, packed with strategic plays, influential figures, and seismic shifts in the market. Get ready to be informed, get ready to be excited, because you're about to hear the updates that truly matter. Let's dive straight into the action. First up, we're tracking a major strategic move that could redefine growth trajectories. We're talking about a significant expansion in AI and Bitcoin mining that's setting the stage for some serious upward momentum. Is this the catalyst we've all been waiting for? You won't want to miss the details on this one. Then, we pivot to a titan of industry whose vision is deeply intertwined with the institutional embrace of Bitcoin. We're exploring the profound impact of his strategic thinking on the broader market adoption and what it means for the future of digital assets. This is a conversation you need to be a part of. Next, we're going deep into the on-chain data, uncovering the patterns of early adopters and large-scale holders. What does their recent activity signal about the current market phase and the potential for a new institutional cycle? The insights here are absolutely critical for understanding where we're headed. And finally, we tackle the big question on everyone's mind. Can Bitcoin hold a critical psychological and technical level, even as volatility continues to rock the markets? We're breaking down the factors that could determine whether this key support level remains intact. Stay with us for all the essential analysis. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. AI meets mining, a growth powerhouse. In a move that signals a significant evolution in the digital asset and technology landscape, IREN, a prominent player in the sector, has announced a strategic expansion into artificial intelligence, AI, alongside its established Bitcoin mining operations. This dual-pronged approach is being closely watched by industry analysts and investors alike, who see it as a potential catalyst for substantial outsized growth. The company's strategy appears to be a calculated effort to leverage synergies between cutting-edge AI technologies and the computationally intensive world of Bitcoin mining. By integrating AI capabilities, IREN aims to optimize its mining efficiency, potentially reducing operational costs and increasing processing power. This could involve using AI algorithms to predict and manage energy consumption more effectively, identify optimal mining hardware configurations, and even detect and mitigate potential network issues in real time. Such advancements are crucial in the highly competitive and energy-dependent Bitcoin mining industry, where even marginal improvements in efficiency can translate into significant financial advantages. Furthermore, the expansion into AI suggests a broader vision for IREN, positioning the company not just as a miner, but as a technology innovator. AI is rapidly transforming various industries, and by embedding these capabilities within its core operations, IREN could unlock new revenue streams and business models. This might include offering AI-driven solutions to other mining operations, developing proprietary AI software for blockchain analytics, or even venturing into AI research and development that complements its existing infrastructure. The convergence of AI and blockchain is a frequently discussed topic, with many believing it holds the key to unlocking the next wave of technological innovation. IREN's proactive stance in this area could place it at the forefront of this emerging trend. From a financial perspective, the market appears to be responding positively to this strategic pivot. Early indicators suggest investor confidence is rising, with anticipation building around the potential for increased profitability and market share. The company's ability to successfully integrate and scale its AI initiatives while maintaining robust Bitcoin mining operations will be key to realizing this growth potential. Analysts are keen to see how IREN's management executes this ambitious plan, particularly in managing the significant investments required for both AI development and large-scale mining infrastructure. This strategic expansion is more than just a business decision. It's a statement of intent. It signals a commitment to innovation and a forward-looking perspective that aims to harness the power of two of the most transformative technologies of our era. The market will undoubtedly be watching closely to see if this bold strategy pays off, potentially setting a new benchmark for growth in the industry. But how will this AI and mining integration truly reshape the operational landscape? And what does this mean for the broader institutional interest in digital assets? Musk's masterstroke, fueling Bitcoin's institutional surge. In the ever-evolving narrative of Bitcoin's journey towards mainstream institutional adoption, the influence of key figures cannot be overstated. Elon Musk, a visionary entrepreneur and a prominent voice in the tech and business world, has once again become a focal point of discussion regarding his strategic vision and its alignment with Bitcoin's growing ascendancy in institutional circles. His pronouncements and actions have consistently demonstrated a keen understanding of disruptive technologies, and his continued engagement with Bitcoin appears to be a significant factor in its institutional embrace. Musk's strategic vision, often characterized by bold predictions and a willingness to challenge conventional wisdom, has a proven track record of shaping market trends and influencing public perception. When he speaks about Bitcoin, whether it's about its potential as a store of value, its role in the future of finance, or the underlying technology, the market listens. This influence is not merely anecdotal. It translates into tangible market movements and a heightened level of interest from traditional financial institutions that might otherwise remain on the sidelines. His endorsement, or even his critical analysis, can sway investor sentiment and encourage deeper exploration of digital assets by a wider array of financial players. The current wave of institutional interest in Bitcoin is multifaceted, driven by factors such as inflation hedging, diversification strategies, and the increasing maturity of the cryptocurrency market infrastructure. However, figures like Musk, who command significant public attention and possess a deep understanding of technological innovation, play a crucial role in demystifying Bitcoin for a broader audience and validating its legitimacy in the eyes of traditional finance. His strategic foresight often anticipates market shifts, and his focus on Bitcoin suggests a belief in its long-term viability and transformative potential. This convergence of Musk's strategic vision with Bitcoin's institutional ascendancy creates a powerful narrative. It suggests that the digital asset is moving beyond its early adopter phase and is increasingly being recognized as a serious asset class by sophisticated investors and corporations. The implications are far-reaching, potentially leading to greater liquidity, price stability, and broader accessibility for Bitcoin. As more institutions enter the space, they bring with them not only capital, but also regulatory expertise and established financial frameworks, further solidifying Bitcoin's position in the global financial system. The community is abuzz with speculation about Musk's next moves and how they might further impact institutional adoption. His ability to articulate complex technological and financial concepts in an accessible manner makes him a unique advocate, capable of bridging the gap between the crypto world and the traditional financial establishment. The ongoing dialogue surrounding his perspective is a testament to his enduring influence and the growing importance of Bitcoin in the global economic conversation. This strategic alignment is clearly a major catalyst for Bitcoin's institutional journey. But what does this mean for the long-term trajectory of digital asset adoption? Whale Watch, decoding Bitcoin's institutional cycle. In the intricate world of cryptocurrency markets, the movements of large-scale holders, often referred to as whales, provide critical signals about market sentiment and potential future trends. Recent analysis of Bitcoin's on-chain data reveals significant activity from these early adopters and major stakeholders, sparking intense discussion about the dawn of a new institutional cycle. The term Bitcoin OG whale refers to individuals or entities who acquired substantial amounts of Bitcoin very early in its history, often during its nascent stages when its value and potential were far less recognized. These holders possess a deep understanding of the asset's life cycle and have weathered numerous market cycles. Their current behavior, whether it involves accumulating more Bitcoin, holding steady, or strategically diversifying, is meticulously analyzed by market participants for clues about the broader market's health and direction. This particular cycle is drawing attention because these long-term holders appear to be exhibiting patterns consistent with previous accumulation phases that preceded significant bull runs. On-chain metrics, such as the net unrealized profit loss, NUPL, and the movement of coins between different wallet types, suggest that experienced investors are increasing their positions. This could indicate a growing conviction in Bitcoin's long-term value proposition, particularly as a hedge against inflation and economic uncertainty. The sheer volume of Bitcoin held by these OGs means their collective actions can have a substantial impact on market dynamics. The notion of a new institutional cycle is fueled by this whale activity and the concurrent increase in interest from traditional financial institutions. As more corporations, asset managers, and even governments explore or adopt Bitcoin, the market infrastructure is maturing. This includes the development of regulated investment vehicles like Bitcoin ETFs, increased availability of custody solutions, and clearer regulatory frameworks in various jurisdictions. These developments make it easier and safer for large institutions to allocate capital to Bitcoin, a trend that these early whales seem to be anticipating or perhaps even facilitating through their own strategic plays. The community's reaction to this data is a mix of excitement and cautious optimism. Many see the increased whale accumulation as a bullish signal, suggesting that the market is entering a phase of sustained growth driven by sophisticated capital. Others, however, caution that past performance is not indicative of future results, and that broader market conditions, regulatory changes, or unforeseen events could still disrupt this potential cycle. Nevertheless, the consensus among many observers is that the behavior of these foundational holders is a key indicator that cannot be ignored. Understanding these on-chain movements is crucial for anyone looking to navigate the current market. The actions of these early whales are often seen as a barometer for the market's underlying strength and the readiness of institutional players to engage more deeply. This deep dive into whale activity offers a compelling glimpse into the market's inner workings. But how does this on-chain data stack up against the critical price levels we're watching? Bitcoin's $100K defense, a battle for support. The cryptocurrency market, known for its inherent volatility, is currently focused on a critical question. Can Bitcoin maintain its footing at the psychologically significant $100,000 support level? As market participants navigate fluctuating prices and ongoing economic uncertainties, the resilience of this key price zone is being closely scrutinized. Bitcoin's journey towards and beyond the $100,000 mark has been a topic of intense speculation and analysis. This level represents not only a significant psychological barrier, but also a crucial technical support point that, if held, could signal continued bullish momentum. Conversely, a sustained break below this level could indicate a shift in market sentiment and potentially lead to further price corrections. The ability of Bitcoin to defend this range is seen as a barometer for broader market confidence and the strength of institutional and retail demand. Several factors are contributing to the current volatility and the pressure on this support level. Macroeconomic conditions, including inflation rates, interest rate policies from central banks, and geopolitical events, continue to influence investor appetite for risk assets like Bitcoin. While Bitcoin is often touted as a hedge against inflation, its correlation with traditional markets means it is not immune to broader economic downturns or shifts in investor sentiment. The market is keenly watching for any signs of capitulation or accumulation from major players that could tip the scales. On-chain data and technical indicators are providing mixed signals, adding to the complexity of the situation. While some metrics suggest strong underlying support and accumulation by long-term holders, others point to potential overhead resistance and the possibility of short-term pullbacks. Analysts are divided on whether the current price action represents a healthy consolidation phase or the beginning of a more significant trend reversal. The upcoming weeks are likely to be pivotal in determining the short to medium-term trajectory of Bitcoin's price. The community's reaction is palpable, with discussions ranging from unwavering conviction in Bitcoin's long-term value to concerns about short-term market risks. Social media platforms and financial forums are alight with debates about the factors that will ultimately determine whether $100,000 holds. Investor sentiment is a crucial element, as widespread fear or FOMO, fear of missing out, can amplify price movements. Ultimately, the defense of the $100,000 support level will depend on a confluence of factors, including sustained demand, favorable macroeconomic conditions, and the continued confidence of both retail and institutional investors. The outcome of this price battle will undoubtedly shape the narrative surrounding Bitcoin's market position in the near future. This critical price action is certainly keeping everyone on the edge of their seats. But before we sign off, let's quickly recap the biggest stories of the day. All right, what an episode. We saw IREN making big moves with AI and Bitcoin mining, Elon Musk's vision potentially fueling Bitcoin's institutional surge, early whales showing massive activity that could signal a new institutional cycle, and the big question: can Bitcoin defend that crucial $100,000 support level? That's a lot to digest, but we've got you covered. If you found this valuable, smash that like button, subscribe to Bitcoin Bulletin for all your essential crypto updates, and ring that notification bell so you never miss a beat. Also, make sure to follow us on all our social media channels for real-time insights and join the conversation. We'll see you in the next one.